If you've been thinking about going live for a while, there are a couple of things that I would recommend considering prior to taking that jump. Now, if you are brand spanking new to trading, I do believe that trading on demo is the best way to learn the buttons. Okay. Learn how to buy and sell, learn what a position size is. This is where you're still on baby pips and you are just looking around. There is no need to put money on the line. If you want to gamble, you can just go to your local or nearest casino. So if you're brand new, demo all the way. A second scenario where I can see demo being appropriate is when you are testing or learning a strategy. So notice being new and testing or learning a strategy is different from being new because being new means okay, what are options, what are time sessions, what are time frames, what are contracts, you're learning. Now the next level of that is what is my edge, right? So defining your edge or testing a new edge is another reason why demo accounts could be appropriate. Okay. And so, by all means, if you have a strategy that you've tested out and you can see that 18 out of 20 times you are in a position to be profitable in that trade, this could mean graduation directly to a live account. Or what I would recommend doing is going the prop firm route. And the reason that I recommend going this route is because when I was starting my trading journey, prop firms were not as easily available, meaning where you have the best of both worlds. You have the best of being able to test your strategy, okay, with live results attached to that. Okay. So what I mean is, yes, in our demo account, we can see that 18 out of 20 times we've been able to achieve X result. But in a live situation where there's money on the line to be made, if you have a $100,000 account with a prop firm and you're up for just making 10%, okay, all you have to do is make 10% that month. There is a statistic that shows that approximately 79% of prop firm traders fail. Okay, they fail this first step. And then, even if they pass that step, then they only last about less than 30 days in being consistent. Okay. And so I said that to say that if we haven't ironed out our consistency, then there's no reason to take a route like I took, which was, let's just say, over leveraging ourselves or taking money out of. I've shared the story where I initially funded my trading account with my 401k that I had been saving up for 5 years. And so while I don't recommend that, I do understand the urge and the desire to go live because there is a result attached to going live. And so that's why I say if you are looking for more of a blended approach, more of a hybrid approach, I would highly recommend looking into a prop firm. And one that I have personally tested and used is funded trader markets. And so what I want you to do if you're really interested in getting started with a prop firm, you can scan the QR code on your screen to get a special discount for being a viewer of the channel. And when you check out their options, you'll see the different account sizes that you can take advantage of. You can start small, but this allows you to get a hybrid approach between understanding what's realistic from trading and still testing out not having to put your whole feet in the water. And so you do eat an elephant a bite at a time. And I do believe that this is an incremental step in determining whether you're ready to go live and put a substantial amount of your savings into a live trading account. So I hope that helps. And by all means, this trading thing, no matter where you are in your journey, just know that you got this and you can accomplish anything because the world is yours, said Nas. All right. So until the next time, trade safe and take care. Each time I look at this, I get excited because we've learned a lot and shared a lot. And I want to really highlight a specific candlestick pattern. You really only need a one way of seeing the market to be successful. And so I want to highlight a pattern that when I started to focus on seeing that only, it made a major difference in my trading. I want to talk to you about what the pattern is and what it's not, so that when you are going to the market of your choice, you are properly qualifying this pattern. So we're going to talk about the bearish harami. Now, notice the direction of the market is very important that we establish that this pattern is found in an uptrend. Oh, that's really thick. Take that off. Let's get that down. So this particular candlestick pattern is found in an uptrend. All right. So we have the market going up to resistance, and after a full body bullish candle, we had a bearish candle that was inside the session, um, the previous session's body, and this signals that there could be bearish sentiment at this level. Now we know that nothing in the market is 100%. However, when this particular pattern is found at resistance, it tends to be more profitable than not. Now, on the flip side, if we have the market coming down to uh, to support, and we have a bullish candle that got a little bit of a wiki there. We have a cool wick. We have a bullish candle that paints inside the session of the previous body. Okay, that bearish body that showed up. Then the market sentiment is showing that this is a reversal pattern. Okay, so I just wanted to highlight that because sometimes when it comes down to trading, we think we have to learn every single pattern, and you can to make yourself more, you can have more tools in the tool belt. But if you're wanting to just simplify and identify a way that you can come in and consistently be successful with knowing what to look for, this is a way to go. And so once you have this, now you say, okay, I'm going to go back to my chart. I'm going to go to trading view, and I'm going to set up my support and resistance lines. Okay. So you're going to set up your pivot points, and then you're going to go through the chart. Let's say you go with USD ZAR just because. Okay. So you pull up a chart on trading view of USD ZAR, you set up your levels of support and resistance, and then you go back and you see how many times you can spot this pattern in the textbook format. And then let's just say, for instance, you get to USDZR and you only find it, let's say you back test a year or you replayed a year on TradingView. Okay. You did a year, and over that year's time, it showed up twice a month. Okay. Twice a month. So that means that we have 24 trades, and out of the 24 times the pattern showed up, you won, and I'm just making this up as we go along. You won 20 of those trades. All right. And so now we have a baseline on where to start our trade plan and our trade strategy, because now that we have an edge, now we have the first step of our filter in knowing, okay, so my trading edge, my product, my service is the bearish or bullish harami. Boom. We have the product that works. We know the product works. There's a market for it. So now I'm going to understand risk management and understand what the risk was involved in those 24 trades. And then I'm going to build a strategy around managing and mitigating proper risk on my trading account. So now that I have a $100,000 account, okay, and I want to run this same quote unquote trading scenario, and I have an opportunity that presents itself twice a month, and based on history, that which is not always indicative of the future, but based on history, every time I stuck to the disciplined view of this pattern, every time I stuck to that, it appeared twice, and each time the trade was a 1 to 5. Okay, so now you can risk 2% of your account. Okay, and now you just made 10 grand on 2 trades, which is much easier than trying to uh, trade. Now, granted, depending on where you are in your career, let's just say you're trading with a prop firm. Some prop firms have rules where you're not able to get all of your profits on one day, and that could pose a different challenge. But even if you take a zero off, or you can add a zero depending on where you are financially, if you had a $10,000 account and you traded twice and you earned $1,000 on those 2 trades, because 2%, you risk 2% of your account to make that 5%. So that's where that comes down to. So one edge can really set you up for success, and then you just do that over and over every single month. And at the end of the year, that's $12,000. And then do it again the next year and make it trading nice and boring again the following year, and again until the account grows and grows and grows, and there is no limit. Thank you for spending your time with me. I hope you learned something valuable from this, because if if you just take one pair, one strategy, one candlestick pattern, stick with it, make sure you understand that that is your product as a trader. That's your business, is the way that you see the market. That's your service that you're providing to the rest of the world. You're seeing when buyers are distressed. Look at it that way. Maybe you need an alternate mindset around this process. You have an ability to see when buyers are in distress. And so you can take that pressure off from the buyers. So until the next time, trade safe, take care, keep going, keep growing your accounts, and keep doing your thing. All right. One of the major keys to success is tracking your performance and tracking your results. And over the past years, I have developed different ways of tracking my trades and holding myself accountable. Wanted to share that in this video. So let's look at how we used to do it back in 2020. Now, this IQET tracker, this is a part of a trading strategy with our ultimate blueprint for holding trades overnight. We teach you the different areas of knowing when to take action on a trade. And so, if we come to our charts and we see that our chart is throwing up a warning signal, this entire tracker has to be completed before we pull the trigger. This is a way to build in discipline and make sure that we're following our own rules every single time that we trade. And so, just to kind of go over this rather quickly, because some of this won't make sense if you've never created anything like this, or if you don't use a tracker. So this identify step here, let me make that a different, can we make that a fun color? Yeah, okay, so let's do that. All right. So the identify step is basically we where we came into contact with this trading idea. So we're gonna put the date, we're gonna put the year, we're gonna put the current price. And in qualifying the trading idea, we're gonna ask ourselves what it is, what's our objective, right? Are we looking to buy or sell? Is the market at support or resistance? Is it at supply and demand? Or is it an M&W, which M&W is also just double tops, double bottoms, right? This area here, stage, what stage, or some people call it phase of the market. What phase is the market in as it relates to market structure? That's another video. We won't talk about that in this video. And as far as execute, so with this step, this is all the information that we need to put into our tracker prior to hitting the button. All right, and I know some people may think, okay, that could take a long time. I might miss a trade. Well, if you're rushing into trades without any sort of plan, then you're planning to fail in a rush. Yes. So we have our entry price, stop loss, target, target one, target two, our estimated risk reward. Now, when I used to write this on here, I used to do reward risk. So that's just a mindset thing. And then I would have notes to track what the performance of that trade was. Okay. So that was 2020, worked out pretty well. Trading, as you know, AI, automation, the emergence of just different tools that we can use have caused me to reevaluate the ways that I look at my trading business and that I track my trades. And so although I may not have found what I believe to be the most comprehensive overall, like that has everything, I've figured out my own strategy of combining the things that work. And so this, you could tell, this is just an updated version of that very same tracker. This is just allowing me to go back in my auditing and sort my trades by knowing, okay, what trades did I sell, what trades were at support and resistance, what trades were in that market phase. And you can see here we corrected that to show market phase. So this is the updated version. And then this is giving us our same criteria. Okay. TradingView is one of my favorite tools to use. And we link the actual chart in this tracker. So if we were to click here, then all of this should match up with the image, and then we should be able to also document that to come back later on to see how the trade performed. And so when we're adding trades to our pipeline, this is what it looks like. This is what my watch list looks like. Unless I come in the same day like this one, it says waiting. So this one has not yet triggered. But right off the bat, I like to color code it because if I have, let's just say, for instance, I had a sell here, but I came to the market and it was at support, then I that color would not be matching, right? So that would be a red, gray, and then possibly red. And so that may be a reason or a grade for the overall trade. So I wanted to show you that because that is the updated tool that I've been using. And then also right now I've been testing out and looking into how this digital trading journal could also help. This is with TraderSync. So still in my first month of testing this out, but I did like how it imports the trades for you, and it also gives you this calendar. Let me bring that in so we can show you that, which is more of a snapshot of how you performed overall for that month. And like I said, I mean, I haven't yet found a comprehensive tool to do every single thing, and I'm okay with that. But as a trader, it is helpful to know, okay, this week, let's say I did 4 trades and that was about 706 this week. This week I did 7 times, right? But 3,800 bucks, that's pretty good on the account size. All right. And then this week, so something in here gives me some insight and analytics that I can go back and audit myself as a trader. What was my best trading day? It looks like Mondays were rocking out. I did really well on Mondays. I could see that right away. So this just gives us another tool to develop ourselves because in this game, we're developing ourselves. If you don't have a mentor, you're developing yourself and you can learn from the market. It does take a while if the market has to teach you, but use all the tools that you see beneficial. Definitely by at the very least, make sure you're tracking your trades, make sure you're finding a way to keep yourself accountable. So, continued success, my friend. Keep going with the trading, keep learning, keep growing, keep challenging yourself. And until the next time, trade safe. Take care.